Hello everyone, welcome back to my channel, The Learning Path. This is Dr. B. Meena, Associate Professor, Head Department of Commerce and Vice Principal Shift 1 from Petition College of Arts and Science, Adaya, Chennai. In this video, I'm going to teach you how to work out a short answer problems under marginal costing technique. Click the I button to have more understanding about the concepts relating to the marginal costing in my previous videos. Look at the slide. Find out the marginal cost from the following. The information, the question is, what is marginal cost totally? That is finding out the marginal cost from the information given. Direct material, 10,000. Direct wages, 12,000. Direct expenses, 13,000 is given. Variable overheads is 8,000. Fixed overheads, 15,000. Out of this information, from this information, we are going to calculate the marginal cost. What is the another name for marginal cost? I said in the previous video, variable cost. So what are the variable costs in this information? The variable costs are direct material cost, direct wages cost, direct expenses cost, and variable overheads. Fixed overhead will come under the category of fixed cost. We are asking only the marginal cost, which is otherwise known as variable cost. So I will consider only the direct material, direct wages, direct expenses, and variable overheads to know the total marginal cost. So marginal cost is equal to direct materials, direct wages, direct expenses, variable overheads, the respective amounts I added. So what is the total marginal cost I'm getting? 43,000. The next problem is ascertain contribution. So how to calculate the contribution? The formula to calculate the contribution is sales minus variable costs. So I have a sales, how much is given? 90,000. So how to calculate the contribution? The formula is sales minus variable cost. Sales is given directly in the problem, 90,000. But the variable cost, how to calculate the variable cost? Variable cost, we need to calculate by using this informations. What are the information we can make use to calculate the variable cost? Prime cost and then variable overheads. Okay. Fixed overheads is irrelevant information to calculate the contribution, because the contribution formula is sales minus variable cost. So sales is given, only thing is I need to calculate the variable cost by adding the prime cost with my variable overheads. So it comes 40,000 plus 20,000 means 60,000. Then I can able to calculate the contribution. Sales is 90,000 and variable cost I calculated as 60,000. Then my contribution is 30,000. The next problem is compute contribution and profit. Compute contribution and profit. What are the information available? We need to check the problem. The special unique feature of marginal costing means look at the information available. Based on that, how we can work out the questions. So contribution, they're asking both contribution as well as profit, right? Then what is the sales? 2,50,000. What is the marginal cost? Otherwise called as variable cost. Marginal cost is otherwise called as variable cost, and fixed cost is given. It's better to follow the marginal cost statement for knowing the contribution and profit as per this question. So what is the marginal cost statement is saying? Sales, if I consider the variable cost, deduct the variable cost from my sales, then I will get contribution. If I deduct the fixed cost from my contribution, I'll come to know whether there is a profit or loss. So we can make use of this marginal cost statement to find the contribution and profit. So what is my sales? 2,50,000. I written over here. What is my variable cost? What is my variable cost? 1 lakh. So sales minus S minus V gives you C, right? Then from the contribution, I need to deduct the fixed cost. My contribution is 1,50,000, which is more than my fixed cost, means the resulting answer must be the profit. Okay, I think you are clear. Then I will go to the next problem. Calculate PV ratio. So we have two formulas to calculate the PV ratio. I explained in the previous video, there are two formulas. In which occasion I can follow the first formula, means when one period information is given, one period information only is available. That time I can substitute this formula, that is C by S into 100. C stands for contribution, S stands for sales. So sales is available in the question. Only thing is I need to calculate the contribution. How to calculate the contribution? By comparing S minus V. S stands for sales, V stands for variable cost. So my sales is 4 lakhs, variable cost is 3 lakhs. So what is my contribution? 1 lakh. Then automatically I can substitute in the PV ratio formula. PV ratio is always that is reflected in the form of percentage. That's why we are multiplying by 100. So 1 lakh is my contribution that I calculated here, and sales is given, and as per the problem is 4 lakh into 100, that gives 25 percentage. We'll move on to the next problem. Calculate PV ratio. Now look at this problem. PV ratio from the data given below. What are the data available? We have the data for 2 years. One is for 2006, another one is 2007. For both the years, we have sales and profit. When we have information about the sales and profits for 2 periods, what is the formula to calculate the PV ratio? Changes in profit divided by changes in sales into 100. So changes in profit, how to calculate? How to calculate the changes in profit means the latest year. I mean the current year minus previous year only you need to calculate. Okay. Don't do previous year. Say for example, 1 lakh minus 1 lakh 80,000 you should not do. What is the current year? 2007. Okay. 1 lakh 80 minus 1 lakh. How to find out the changes in profit? What is the latest year minus the previous year? Okay. Same way, what is the latest year sales? 10 lakhs and previous year sales is 6 lakhs. Okay. Then get the answers multiplied by 100 means I'll get 20%. So again, I'm highlighting in this situation, this formula that PV ratio is equal to changes in profit divided by changes in sales into 100 will be utilize or substitute to calculate the PV ratio when we have sales and profit for 2 years. That time only we can make use of this formula to calculate the PV ratio. Let me check another problems. Find out the variable costs. What are the information available? We need to check first. They are asking variable cost. The information available is sales and PV ratio. So once I knew that is variable cost only the question, I knew the sales. So bring the margin cost statement always in your mind. Always please have the margin cost statement in your mind when you are working out the problems under margin costing. That is very, very helpful to work out the things very quickly. What about the margin cost statement? Sales minus variable cost, that gives contribution, right? Contribution minus fixed cost gives either profit or loss. So S minus V gives you C. So I have the yes. I have the yes. Please follow my explanation. I have the yes, that is sales. If I use the contribution, I can compare the contribution with the sales to calculate the question asked variable cost. Again, I'm repeating, sales is given in this problem. If I use this both the information to calculate the contribution by applying the formula, contribution is equal to sales into PV ratio. Sales is to 4 lakhs, PV ratio is 25%. So contribution is 1 lakh. So if I knew contribution, I can compare the contribution with my sales 4 lakhs. So that gives, what is that? Variable cost. So 4 lakhs. So look at that. Contribution is equal to sales minus variable cost. This is a formula we studied in the PV ratio calculation now. So contribution I calculated. 1 lakh. So I written on my left hand side. Sales is 4 lakhs minus variable cost question mark. So this minus variable cost will go that side, mean it will get plus sign. And this 1 lakh, if it is coming this side, right hand side, mean it will get minus sign. So 4 lakhs minus 1 lakh. What is my answer of variable cost? 3 lakhs. I think all are able to follow my explanation. Next sum is sales 10 lakhs, variable cost is 7 lakhs, loss is 1 lakh. The question is fixed costs. Find out the fixed costs. So whenever we have loss, we can substitute this formula to calculate the fixed cost. Already I told you in the previous video when I was discussing the formula for marginal costing. What is that formula? Fixed cost. It's all derived from the marginal cost statement only. What is marginal cost statement? Sales minus variable cost, that gives contribution. Contribution minus fixed cost, then it will give either profit or loss. In case if it is loss means your contribution is lesser. Okay, so I can derive this formula like that. Fixed cost is equal to contribution plus loss. So fixed cost is not there, but contribution I can calculate by comparing the sales minus variable costs, right? So what is my contribution? 10 lakhs minus 7 lakh. What is my contribution? 3 lakhs. Now I can apply. Therefore, fixed cost is equal to contribution is 3 lakhs and loss in case means I should add. In case in this problem profit is given means I should deduct. Okay, have it in mind. So 3 lakhs, the loss is 1 lakh. So what is my fixed cost? 4 lakhs. I think you understood about this problem. Next problem is sales. 50,000, fixed cost is 10,000, profit is 5,000. The question is calculate variable costs. It's better to apply the marginal cost statement. What is the marginal cost statement? Sales is 50,000. It's given in the problem minus variable cost, only the question. I put the question mark here. If I don't know the variable cost, definitely I will not able to calculate the contribution. That's also I put question mark. But fixed cost is given. Fixed cost, how much is given? 10,000. And the profit is also given 5,000. So if the profit 5,000, fixed cost is 10,000 means what could be this value, that contribution? If there is 15,000, then only I deduct the 10,000 fixed cost, I will get the 5,000. Can you able to follow? If the contribution will be 15,000 means then only I deduct the fixed cost 10,000, then the profit will be 5,000. So I calculated the contribution. Right? So once I calculate the contribution, I can compare this contribution with my sales to find out the variable cost. So sales is 50,000, contribution is 15,000 means what could be this value of variable cost? Definitely it is 35,000. It's very easy to have always in your mind about the marginal cost statement. Marginal cost statement, what is that? Sales minus variable cost, that gives contribution. Contribution minus fixed cost, that gives either profit or loss. Next, from the following, find out the profit. We have fixed cost 5 lakhs. Variable cost per unit is given 10. Selling price per unit is given 15. Output level 1,50,000. So question is once again, what is the profit? Okay. And how to calculate the profit? Let me check how I proceed. First, I can make use this two information, variable cost per unit, selling price per unit. I have to compare it to find out the contribution per unit. So what is my contribution per unit? 15 minus 10, 5. If I calculate the contribution per unit, I can convert per unit value for 1,50,000 units. So 5 rupees is a contribution per unit I calculated. So if I calculate for 1 unit, definitely I can calculate for 1,50,000 units. So 1,50,000 into 5, what is my contribution? 7,50,000. And what is the fixed cost is given? 5 lakhs. Then what is my profit? 2,50,000. Okay. So the thing is, the feature again I'm highlighting once again. Under marginal costing, look at the problem, what information is available. That information will make us to calculate to find out the answers for the asked questions. Okay, let me check one more problem in this video. Fixed cost is 8,000, profit is 2,000, BEP is rupees 40,000. Find the actual sales. Usually they will ask BEP, right? But that BEP answer is given means we have to use this information to find out one thing. Then we'll find out actual sales. That means, okay. So how to calculate the sales? So as per the formula we discussed in the previous video, sales in rupees is equal to fixed profit plus, sorry, this is not fixed profit, it's fixed cost. One second. This is fixed cost. Okay. So this is fixed cost. So sales in rupees is equal to fixed cost plus target profit divided by PV ratio. What is my fixed cost as per this problem? 8,000. Target profit is, that is 2,000. And divided by PV ratio. The PV ratio, if you knew, means then automatically I will calculate sales. So what information I want to calculate? PV ratio. For this purpose of calculating PV ratio, can you able to understand how I am trying to explain you? I want to calculate the sales. I have fixed cost. I have a profit. But only thing is missing is PV ratio. If I knew the PV ratio, I definitely calculate the sales. So this PV ratio, how can I calculate? For that, what extra fitting information is available means BEP. So how to calculate the PV ratio? Only in BEP formula, we can able to calculate the PV ratio. That is BEP, that too in rupees formula. So rupees formula only, the denominator will be PV ratio. I said in the previous video, fixed cost divided PV ratio. BEP in rupees is how much is given? 40,000. I return on the left hand side. Fixed cost is 8,000. PV ratio question mark. So cross multiplication. PV ratio will go that side. This 40,000 will come in the what is that? Once again. So I repeat, BEP in rupees is equal to fixed cost divided PV ratio. So BEP in rupees I knew, that's why I written on my left hand side. Fixed cost is 8,000, PV ratio question mark. So PV ratio will go that left hand side and 40,000 will come in the right hand side, but coming under denominator. So 8,000 divided by 40,000. PV ratio always mention the percentage wise. That's why I multiply by 100. Simplify this, then you will get 20%. So yeah, if I knew the PV ratio 20%, I could have substitute here to find out the sales. So this is the way how you can work out to calculate the actual sales. If you have fixed cost, if you have profit, if you have a BEP. Simply we need to apply our presence of mind with the information available, how we can proceed to calculate the questions as per the question. That is a unique feature of marginal costing, provided if you know the marginal cost statement order as well as the formulas. If you are familiar with the formulas, you can able to apply your presence of mind, how to derive the answers, how to derive the formulas through the marginal cost statement, and how to calculate the questions answers with the information available. Thanks for watching my video. Subscribe my channel, click the bell button. Until then, bye bye.